when the floor price of a residential land in Hangzhou soared to 77,000 RMB per square meter. The differentiation logic of the national housing market became clear. The land auction banquet at the end of March was just a surface phenomenon, reflecting the deeper trend of accelerating resource concentration in core cities. This ice and fire pattern is visibly reshaping China's real estate landscape. Hangzhou of the Yangtze River Delta and Chengdu are becoming the housing price engines among new first-tier cities. The high price of Hangzhou's Shuweidian New Village plot signals that future housing prices may exceed 150,000 RMB per square meter, while in Chengdu's Jinjiang district, land prices have been refreshed twice in half a month, with suburban floor prices reaching the 40,000 RMB per square meter mark. This land market frenzy has quickly spilled over into the second-hand housing market. In Hangzhou, top floor units jumped from 2 million to 2.6 million RMB, and the average second-hand housing price in March increased by nearly 30% year-on-year. Similar scenes are playing out in Chengdu, with new housing sold-out discs frequently appearing and prices steadily rising. The recovery trend in first-tier cities is even stronger. In Shenzhen's Longgang, new housing was sold out upon launch. And in Shanghai, the average daily transaction volume of second-hand housing on weekends exceeded 1,000 units. This supply and demand prosperity contrasts sharply with the sustained pressure on small and medium-sized cities. Data shows that the inventory digestion cycle in third and fourth-tier cities nationwide generally exceeds 18 months, while core cities like Hangzhou and Chengdu are experiencing a housing shortage. This stark divergence essentially reflects the deep migration of population, capital, and industries to urban clusters. From the Yangtze River Delta to the Guangdong, Hong Kong, Macau, Greater Bay Area, 19 urban clusters are reshaping economic geography. The total economic output of the 3 provinces and 1 municipality in the Yangtze River Delta has exceeded 70 trillion RMB, equivalent to the economic volume of the entire European Union. The Guangdong, Hong Kong, Macau, Greater Bay Area contributes 12% of the national GDP with less than 0.6% of the national area. The suction effect of these super economic circles is becoming increasingly evident. As regional core nodes, Hangzhou and Chengdu are receiving dual dividends of population and capital. In contrast, third and fourth-tier cities with continuous population outflow are seeing weaker housing price support. The mirror effect of Tokyo Bay is thought-provoking. Despite 14 consecutive years of negative population growth in Japan, housing prices in Tokyo's 6 central districts have continued to hit new highs, surpassing the peak of the 1990 real estate bubble. This indicates that when the population dividend fades, the value of urban core areas may be redefined. Core cities in super economic circles like Hangzhou and Shanghai are replicating this asset logic. This divergence is not a short-term phenomenon. As the high-speed rail network becomes denser and the digital economy develops, resources will further concentrate in cities with industrial capacity. Over the next 5 years, it is expected that 70% of the nation's new residential investment will flow to 20% of core cities. For homebuyers, the choice is not just about real estate but about the growth potential of the city. Urban clusters that can continuously create jobs and attract young people will become the ultimate container for asset allocation. Like and follow us for more housing market analysis and information.